What's up, guys? It's Ray J back with another video, and in this one I want to break down what's happening with SPY, Tesla, Nvda, the QQQ, and a couple of other tickers. I'm going to break down what's happening with the economic calendar moving forward, talk about other factors out there, what you should be watching for as time goes on. But just know that I am not a financial planner, so take nothing I say as financial advice. And also, if you guys can, please check out the Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000 or more, you're guaranteed 30 in total, not to mention an 8.1% APY in uninvested cash. The offer ends at the end of March, so check it out before they run out. It's been extended for a little bit longer. Anyways, let's talk about what's happening with the markets and Tesla. So, looking at Tesla, we had a bit of a downtrend that was being respected for the last couple of weeks. But the question now remains, are we about to see some kind of big bounce? Well, the good news is that Tesla closed above this resistance. That's looking very promising right now, forming this accumulation that we were talking about. In my video yesterday, I said that the market was looking a little bit more in favor of bulls because of the fact that the market was at support. Support was being held up on Nvda, on Tesla, and these different tickers. And then on top of that, it depended on CPI, and that's what helped the market push so far. So why is the market pushing like this? What do I think is going to happen for tomorrow? I'll be talking about all of that in the next couple of minutes. But I first want to talk about some data. Just know that today was a nice day for the markets. We saw Nvda, Apple, Google, Microsoft, big tech, Amazon, consumer durables like Tesla, and many other stocks out there in the green. We saw the finance sector in the green as well if you look at Berkshire Hathaway and JP Morgan. And the list goes on as we saw a lot of buyers stepping in. So the buyers were defending, pushing the share prices up very, very nicely. And for now, the bulls have a bigger edge. So the question is, why did that happen and what's going to happen at least moving forward? Well, let's first talk about this data. Now, one thing you have to remember about the markets is that I did mention that there were a lot of people who started to short the markets, and the market is dictated by these algorithms that are going to do what's more advantageous for, the bigger players. I'm just going to say that for the bigger players, whatever is more advantageous for them, that tends to happen. And what happened was a lot of people started shorting the markets again, so it made a lot more sense for the market to bounce. The market also held support. If you look at Nvda, if you look at Tesla, lots of big tech stocks, they're holding supports. So it was no surprise to see a bounce like this. I did mention yesterday I was leaning a bit more in that direction. So why did the market bounce? What data caused this? It was CPI. Just as a quick recap, core CPI month over month was at 0.2%. That's aligned with expectations. Core CPI year over year was at 3.2%, below expectations. That's good for the markets, more bullish news. And then all items CPI month over month was at 0.4%. That's as expected. However, all items CPI year over year was at 2.9%. That's a slight increase compared to before, but that was technically as expected. So I would say that the market most likely already priced in a bad CPI report. And because the numbers were as expected, the market still got a bounce, even though we did see CPI technically go up a little bit for the year over year basis for all items. It wasn't really enough to get the market to dip more. The buyers came in and they used this as an excuse to squeeze shorts, which was more advantageous for them. Now, for other factors out there, just know that there wasn't really anything else that was too crazy that came out. For tomorrow, we have essentially initial jobless claims an hour before market open. And then we have data from the Philly Fed. We have the Philly Fed employment, new orders, prices, and such also coming out. So I think employment may cause more volatility. So 1 hour before market open, look for the data to cause some volatility as the most likely possibility. Please keep that in mind. Besides that, we'll see what happens with the data coming out. For CPI, just know this. All items are on a bit of an uptrend. If you look at the last couple of months, we're making, you're seeing inflation going up a little bit, not the best of news. This is why the market got a big sell-off initially, and we'll see how this ends up affecting the Fed during the next FOMC meeting in the next couple of weeks. On top of that, we also happen to have core CPI. This was looking a little bit better, so it's very flat for the last couple of months since September, but this is the first time since September we actually saw a bit of a decrease in it. So we'll see if this ends up happening again or not. We'll see if we get any kind of shift, if we get better numbers moving forward. For now, core is looking a little bit better, but all items are still a little bit hot. We'll see if we get better numbers. Another factor that helped the market balance was this. We had JP Morgan Chase, Citi, BlackRock, Wells Fargo, and Goldman Sachs all announced earnings. JP Morgan did relatively well, beating on EPS and revenue. We also saw Citi announce that they're looking for profitability for the upcoming year. BlackRock did well. They have like some of the highest amount of assets under management we've seen in their history, not to mention the fact that they beat really strongly on EPS and revenue. So the majority of bank earnings were very strong and promising. That was good for the markets. Now we have TSMC, United Health Group, Bank of America, and Morgan Stanley all announcing earnings. We'll see what this leads to as well, so please keep that in mind. The last thing about the broader markets is this: the fear and greed index is currently at fear. So we'll see if this shifts closer to neutral or not. If the market maintains these levels, it could most definitely do that. And then for momentum, it's currently at extreme fear. We'll see how well we hold above our 125 daily moving average. Besides that, the put to call option ratio is at extreme fear. So we start to see a lot more put buying than before as the sellers came back, continuing to step in. And as a result of that, okay, what happened was we started to see more of these buyers stepping in and they start to squeeze shorts. So it's not necessarily a surprise. And finally, we had the VIX. This is continuing to fall to a more neutral position. So we'll see what that leads to, at least moving forward. With that being said, the market's holding up decently. The question is what's happening with Tesla news. Let me just quickly talk about Tesla news and I'll break down the chart. So as far as Tesla is going, the new Model Y refresh has launched in China and Australia, and there's more headlines that suggest that it could be coming in Europe very soon. Many news sources claim that they're about to start production or they're already launching production in Berlin. If that's the case, that would be more bullish. I think that would be a good piece of news. We don't have confirmation yet from Tesla from what I'm seeing so far, but I excuse me, I think there's a possibility that it could be launching in Europe very soon. On top of this, I'm seeing that there's about 50,000 orders for the Model Y Juniper already on its launch day. People are very, very excited about this. They've been waiting for this for quite a while, and it's very exciting to see this. This is what some sources in China claim. It's not guaranteed, though. I don't think Tesla has confirmed this. But if anything, I think it's a good piece of news, and I do believe they will eventually get tens of thousands, if not hundreds of thousands, of orders of this very quickly. It's going to be a big hit, so I can't wait to see how it ends up looking for them. On top of this, there's been some news that Tesla may suspend part of the new Model Y lines in China because they want to upgrade some systems. That's what they typically do when they have new models, new variants, and refreshes and such. So no surprises here. They just want to improve their accuracy and factors just like that. Now, there was some bad news. Wells Fargo was saying they predict 70% downside for Tesla, which I don't really agree with. They think Tesla could dump to about $125 per share because it once again does not have the best of fundamentals to back up the share price. They're saying that there's been too many discounts, the deliveries are not that great, and this and that. And they gave Tesla about a 78 out of 100 in terms of its score. I personally disagree because I think that there's so many potential catalysts that are going to help the share price in a lot of ways, such as developments with the robotaxi. We're getting closer to that release. Developments for AI and self-driving technology and sales to potentially improve. What could help Tesla is this, and that's the reason why I don't think it's going to pull back that hard back down to the 100s. I just think that's a little bit too extreme. And one of the reasons I say that is because Tesla has a better piece of data to compare itself to really help it this year. And let me explain. So their sales were kind of weak last year. I'm going to be 100% honest because if you look at the American sales, their sales are down 6% for the Model Y in 2024 compared to 2023. 17% for the Model 3, they're down that much. For the Model X, they're down 19.8%. Model S is down 31%. Their 2024 sales were significantly weaker than their 2023 sales in the US because of high interest rates and factors just like that. Now, although that's a sad piece of news, just know that with the new Model Y refresh potentially coming, with the growth in the Cybertruck and factors like that, I think Tesla could offset this. And then the standard is getting lowered for Tesla. The standard is getting lowered because of the fact that their sales weren't as strong last year. So that gives them a better chance to not only match, but try to surpass the numbers this year. Because as time goes on, Tesla's going to improve their capacities and they will find more mechanisms to get those sales up. So I know that the tax credits may shift, which could negatively affect Tesla. But as long as they continue to see nice growth and as long as demand remains for the Cybertruck, I think they could still offset a lot of that. So this gives them a lot of potential to grow for the next couple of years, even for this year. And that could help them with the share price to a larger extent. So what do I see for the share price of Tesla? As you guys know, it's an absolute monster and has so much potential. So I'm just going to focus on the charts for now. We have a double bottom leg structure. We were talking about this yesterday, and Tesla got a nice bounce from here. Looking at the data yesterday, we did see some weakness developing on the chart, but I said that as long as CPI is decent and we get a positive reaction, Tesla will bounce to 420 plus. I said that yesterday, and that's what happened so far. So in this case, now we're trying to break this resistance trend line. If Tesla ends up failing, just hypothetically, and we can't hold above 425. We could be retesting like 420 or so, but if we can't hold that, we're looking for a move back down towards 414, then 406. And if that fails us, we will be dumping right back down to make a move back down. but I don't find that to be very likely because of the fact that Tesla is holding up quite nicely. What's very likely is Tesla might dip a little bit, and as long as we hold above 420 as time goes on, we could continue to see a bounce like this off this accumulation back up towards the 440 area, because we have a double bottom and accumulation, and this also looks like a left shoulder headed in the right shoulder. So I think this favors a back test and a bounce as the most likely possibility. We could dip to about 420, and as long as we hold that, we could be looking for a big bounce and an attempt to get back up towards that gap fill at 433, and eventually back up to 440 to start pushing higher. If we don't hold above 420, we could be dipping lower towards like lower levels like 414 and then 408. But I'm favoring it might be retesting like the lower 420s just to bounce and continue this push. After an 8% day, we have a lot of momentum that remains, and typically that leads to more upside. On the daily chart of Tesla, we're doing a good job as we are trying to break out right here. We have a lot of these gaps to fill, so this makes me suspect that this could continue as long as we hold above 420. We could see a dip and a bounce, and Tesla will eventually fill the gap to about the 430s and eventually try to make its way back up towards many of these other gaps. So it looks more bullish on the daily and the 4-hour time frame. I think the odds favor a little bit of a dip and a bounce, a dip to 420 or so and a bounce back up to about 433 and eventually past the gap fill for 440 as the most likely possibility. If we don't hold 420 though, I will be a little bit more concerned because we will return into this like wedge that's been forming, but this is the potential for us to try to break out here, so I see potential in this. For others out there, we have SPY. Okay, SPY is looking pretty decent, but I do want to give you guys a warning about something involving it. SPY technically on the daily chart has this gap, so we'll see what happens with this. There's a big gap down to about 584. Hypothetically, if SPY rejects off 594 and we end up dipping below 590 and 588, we could be looking for a move back down to 584, and we'll see if we bounce off that or not. So that's like the more bearish case. Just hypothetically, if we fail to hold 588, look for 584, then a bounce like that as the most likely possibility. But that's not looking as probable because of the strength that SPY is displaying on the daily, and also because of the 4-hour. If we break structure at this resistance, we haven't been able to break 594 yet. If we break this tomorrow, I think SPY goes up to about 596. And as long as we're above 595, we could continue to push for the 600s to make a move back up, especially as we approach the next administration's inauguration. That could be a big factor. So my prediction is that we do favor upside a bit more, and we're going to most likely try to break 594 to push for 596 and eventually 598. I favor that a little bit more, but we'll see just to be safe. So watch this trend line for confirmation just to be safe. Same thing with the QQQ. We have this resistance right over here. If SPY could hold 517, we're looking for 520, then 524. If we end up losing 517 and we end up dipping below 514, look for support at the 511.87 area or below. So if we're bearish on the QQQ, look for rejection off 517 to fill the gap back down, all the way back down to the lower 500s, like that. But if we're bullish, you want to see us try to hold above 517. As long as that holds, we're looking for 520, then 524 as our targets as the most likely case. I favor upside a little bit more, but I want to see confirmation to see if we could hold 517 first. So far, we favor upside. I'm going to close this real quick. I just want to say that I'm going to actually remove my drawings, but maybe redraw a lot of things on this. But just know that we're looking quite decent on the Russell 2000 IWM. I want to see if we could try to hold above this key resistance that's kind of like forming right over here. So if you take an extended trend line just like this, we're going to be watching to see if we could first off hold this. So I'll be watching that as our first resistance. And then simultaneously, if we end up losing 221.8, we could be dipping much lower. So we'll see how things end up going. But in my opinion, I think that we could be pushing for 226 plus. If that breaks, we're looking for 228. So I'll be watching these levels very, very closely. On ES, we have this resistance around 6,000. If that breaks, we're looking for an attempt to get back up to about 6,033, right back up to where this resistance is over here. If we can't hold above this, if we don't break to the resistance and we reject off 59.80, we're looking for a dip to about 59.60. Looking at the trend right here, we do look a bit more bullish. As long as we're above 6,000, I'm looking for 6,033 as this trend line could be retested. So we'll see if we continue to break out on ES. Although it favors upside, we'll see just to be safe. For the rest of these, we have NQ. NQ has resistance right now around 21,422. If we reject off this, we're looking for a dip back down to 21,300. If we break this, we're looking for 21,500. It could go either way. As of right now, we favor that we're going to try to bounce right here and try to push for 21,500, especially after the big green bar in the 4 hours. So we'll see if that ends up being the case or not. But overall, we favor upside, so give this some time to progress. On Bitcoin, we look a bit more bullish because we're holding support right over here. I think that this could be forming a nice accumulation right here around that 100,000 area. So if we do see a small dip like this, it could try to push for 102,000. Looks a bit more bullish to me because of this bullish divergence and the breakout we're getting as we broke in this structure right here. So overall, Bitcoin's looking quite promising. For Nvda, we're holding support. So I want to see if Nvda could try to get back up to 137.2. I think we push for that tomorrow. If we break that, we're looking for 138 to 140. So look for a test right here. If we get a rejection, we come back down to 133. But if we break 137, we're looking for 140 as our potential target. I'm leaning in the direction this is going to be pushing for 140 very soon. So it looks a bit more promising. For Aapl looks a bit more bullish. We have this resistance to watch for at 140 to 137. One of the things I mentioned is that when you look at Aapl closely, we have an inverse head and shoulders like structure, a left shoulder headed than a right shoulder. This could lead to essentially 240 and eventually 241. So I think we favor an upside move to about 240 as the most likely possibility. For Netflix, we're looking a bit more promising now. We were talking about how there was a bounce that was pending as we were building an accumulation right over here. If it breaks 858, we're looking for an attempt for 868 as the next potential target, but we need confirmation first if we could break 858 or not. If we do, we're looking for 868 as our target, so I see potential in this. For MSTR, we have a gap to fill up here. Also, just know that we have an inverse head and shoulder, so it looks promising. There's a left shoulder, a head, and then a right shoulder. As long as we don't lose 350, we favor a push for essentially 380, so it looks a bit more bullish to me. Celsius looks bullish if we could break past 27.66. I'm looking for an attempt to get back up towards 28.5. If we end up losing support at 26.8, we could be dipping back down. But I think this is favoring 27.6 to the 28 as the most likely possibilities. For Supermicro, we have 31.63 as our resistance and then 32.41. If those break, we're looking for 34. If we end up losing 30, we dip back down. I think this is favoring 31.6 and 32.4 is the most likely possibilities. On Palantir, I think that Palantir is looking bullish on the 4 hour. As long as we don't lose 67.8, we're favoring a push back up to 70 and 70.9. So overall, Palantir looks a bit more bullish to me. For Rivian, we look a bit more bullish. If we break 14.02, we're looking for essentially 14.5 to 15. So I think we're favoring upside right over here if we could break 14.02. So give this the time it needs. For SoFi, we're breaking out right here. So as long as we can try to break this resistance, we're looking for an attempt to break past the 16s. Overall, we're forming a nice accumulation. I think we could be looking for the 16 plus area. So give us the time it needs. For AMD, we have 121.4 and then 122.5 as our targets. I think we favor 121.4 is the most likely possibility, and I think we favor upside. For ARM, we have a nice looking range right over here. So we're going back and forth between these levels, but just know that we favor upside for 150 plus. So ARM may be trying to push a little bit higher for 150. So give this some time to progress. Coin has a nice inverse head and shoulders accumulation, so we could be looking for this imbalance flow around 283. As long as we don't lose 269, we favor upside for the 280s. Amazon looks a bit more bullish as long as we don't lose 221.69. It's favoring 225 or above. Meta is looking so pretty good, actually. We have to try to hold support at 606. If 606 fails us, then this could be dipping to 600. This could be like an inverse head and shoulders here. So as long as it holds 606, it could try to bounce for 620. So keep that in mind. Microsoft is going to be testing 428.15. If that breaks, we're looking for 430. And if we lose 424, we dip back down. I think this is favoring a push for 428 plus, so give this the time it needs. For Google, we look a bit more bullish. We're looking for an attempt to get up to 198 to 200, so we'll see if that breaks. GameStop is looking a little bit weaker. It could be retesting 27.5 before it attempts to bounce. It does love to base around here, so look for a little bit of a dip, and we'll see if we get a move back up. AMC is going to be testing 3.6. If that breaks, we're looking for essentially 3.8, so give it some time to progress. DJT looks a bit more bullish. We're looking for 42 as our potential target, so I think it's doing a good job. The VIX has a head and shoulders and has a bearish engulfing candle. There's a gap to fill down here, so it technically looks a bit more bearish. We'll see just to be safe because it is approaching support around 15.7. If we lose the 15.75 area, I do expect this to dump more, which tends to be bullish for the markets. The 10-year is looking a little bit weaker as a gap to fill down here around 4.6 and eventually 4.56 is the 50 EMA. And then not DJT, the dollar index is so right now, very flat around 109. So we'll see what happens with all of this, at least as time progresses. So my view of the market is that we have to watch for confirmation just to be safe, but Tesla is favoring upside as we're seeing more buyers stepping in. I would like to see Tesla try to hold this support. So there might be a small dip tomorrow morning around that 420 area. And as long as we bounce, we could continue to push quite easily to about the 440s and eventually 450. So I favor upside a bit more, but let's watch for confirmation just to be safe. So I want to make that very, very clear. With that being said, I thank you all so much for listening. Have a good rest of your day. I'll be back tomorrow morning before market open for another update. Until then, I just wish you all the best and peace out.